If I could show you exactly how to save $600 a month on your mortgage or $7,500 a year, would you be interested? I think you would be. I'm going to show it to you today and give you the exact scenarios on how we're using other people's money, or specifically builder money, to get your home to a place that makes a little bit more sense and save you as much money as possible. Because I don't know if you're like me, but like life has just gotten expensive, and so we're still trying to buy houses, we're still trying to move, and the best way to do that is to use some of this incentive money that builders are putting out there to make it make sense. So what I've got my iPad right here in front of me. I'm actually going to share my screen. We're going to draw it all out. I want to show you like what this looks like, how to actually use the builder's money. What does it mean when they're giving you this money? How do we get the money? Like, does it actually make a difference on our payment? And then show you some very real scenarios on how this is actually playing out. So we haven't met before. My name is Zach. My team and I, we sell new construction real estate. That's what we specialize here in DFW. So like I said, I've got my numbers here, and I'm just going to tell you, I ran the scenario already on this one particular house, and the savings monthly were $628 a month based on the scenario that I'm looking at. And of course, this will all play out together. So let me see if I can shift my screen over and get you guys to look at what I'm looking at down here. Okay, before I show you my iPad screen, let me show you my computer screen so you can kind of see what we're looking at, so I can give you some hard numbers for where we're looking and how we're getting there. So here we go. So we're on one of the builder websites. We're on Highland's website, and as you can see up there in the corner, wherever my mousey mouse is, if I can find my mouse, I can show you. There it is. Look at that. 4.49 intro and a 5.49 fixed rate on their quick moving inventory. So we see builders like this advertising stuff like that all the time. So we've got their advertisement. We've got the trophy advertisement with rates starting at 3.99. So it's not just one builder. We've got the pace setter one that shows, hey, rates as low as 2.99. What does this mean? This one we'll actually, we got to get into details on this one. Or 5.75 rate and up to $10,000 in closing costs on select inventory homes closing before March 31st. So guys, you have tons of opportunity, and builders are always rolling this out. The more we continue to see high interest rates, and let me look just out of curiosity, rate closed on average for a 30-year fixed at 7.1%. The more we continue to see that, the more I'm going to continue to be incredibly forward about talking about builder monies and the way that they're incentivizing rates and the way that they're buying rates and the way that they're using forward commitments, because I think it's one of the best ways to get into homes right now, especially here in the DFW market, with builders having tons of inventory sitting that they need to move. And honestly, some of these builders are even doing these commitments on lending for the build of a home. So I've got a couple of builders that I've heard that have said, hey, we're actually, for the life of it taking us to build, we're going to lock you in on a rate, so you're good to go, right? But again, I want to show you exactly what this means. I want to walk you through the math. Hopefully this is kind of a helpful thing to make this a little bit make sense. So let me see if I can get you guys down here, and we'll do it like this. Had a little bit of technical difficulties. I think I figured it out. Let's see if we can make it so y'all can see what I got going on. Okay. So the first thing I got to talk about is I wrote my pre-notes right here. So we have to understand maximum allowable contribution. So this is super important in the context of all of these things. So if you're, because there's only so much money, because you're gonna be like, Zach, can we get this? Can we get this? Can we get this? And I'm like, yeah, we can totally get all these things. But because of federal lending guidelines, we do have some things that we can and we can't do. So a maximum allowable contribution. So if you're going conventional, not FHA, conventional, less than 10% down, you have a max of 3%. 10 to 24 max is down, or contribution is 6%, and then 25% and above is max contribution of 9%. FHA's got a 6. VA is 4% plus. Check that out, 4% plus standard closing costs, so they can get a ton in there. And we're going to talk about the forward commitment in a minute. Also, just a disclaimer before we get into any details on any of this, I need to tell you, I'm a real estate agent. I'm not a mortgage lender. I can just kind of talk about this thing at a high level, show you baseline what this stuff means. I'm just trying to make it as simple as possible. In order to get the best possible scenario out of this, I do need to connect you with one of my lenders so we can run you through the full gamut of what's going on, get you qualified, get you with these builders, and get you into your new home. So we're just kind of giving you a overview education class today. Think about this like a intro to understanding how to buy a home. Like I said, for all the greater details, we can get you with a lender and we're getting it all squared away. Back to my regular scheduled screen sharing here. So if we're looking at that, and then you're asking, it's like, okay, Zach, well, if the builder says you've got, let's see, if I move this out of the way and we go right here, and the builder says, hey, here's $25,000. like so. Oh wait, let me put you guys right there. $25,000. And Mr. Builder right here, got a funky leg, whatever, says here, let me hand you the money. Builder says it's yours, and I'm gonna give it to you guys. You got $25,000, and you're all excited. Whoop-de-doo. Okay, you're not here for art class. You're here for actual understanding of this, how this works. So they give you $25,000. How do we use this money? What's the best way to do it, right? We did a video a couple weeks ago talking about all the different the ways you understand forward commitments and the like buy downs and things like that. But I want to give you the details of that here. So let's say you want to buy your interest rate down. You're like, Zach, how far can we get? How far can we get with our $25,000? Well, here's how the math kind of works, all right? So this is what we're calling, it's called a discount point. So let me write it down. Also, I sell houses. I don't have pretty handwriting. My wife makes fun of me all the time because my handwriting is terrible, but somebody told me one time that if your handwriting is bad, it's because your brain moves really fast. I don't know if that's true or not, but I'm sticking with it, and that's what I believe. So discount points. So discount points are what gets your rate down for the life loan, right? So if we're looking at it and we said, hey, we're at 7.11 or 7.10% is the average. Here's how the discount points work. So 1 point, you see that? 1 point equals, no, that's cool. We can do that. 1 point equals 0.25% off interest rate. Okay, there we go. So 4 points equals 1% off rate. Got it? 1 point cost is equal to 1% of loan amount, not purchase price amount. That's a big differentiation. 1 point equal to 1% of the loan amount. So for simple math, a $400,000 loan for 1, 2, 3 loan, every point is 4K, right? Tracking with me here? Simple math. So 4K, and then let's say you have $20,000. $20K, and you have your $400,000 loan amount at 4K. So 20,000 divided by 4,000 equals, it says 5. Stop that. 5 points, right? And so at that point, 5 points is 1.25% off rate, whatever the rate is in the market, right? So that is as simple as I know how to do that math, right? Stop asking me to solve things. That's as simple as I know how to do that math right there. So you understand how to do your discount points and all of that with the builder, right? So if they're saying, hey, you've got flex cash, or we're giving you this money, remember you got to understand how much you can take based on your actual loan amount. You have to understand, like, based on the type of loan, based on what you're doing, based on how much down payment, you have to understand how much you can get. If they're offering you flex cash, just know that there may be a couple caveats that we got to work through, but that's kind of how we work the math on the rate buy downs and the discount points. I kind of push pause again. All right, I've talked you through the discount points. Now we asked, you saw, if you were looking at my notes, we were looking at the forward commitment, right? So like if we come back wherever it's at, where's it at? Oh, there's my picture. Forward commitment. So what is this, right? What is that? So that's where, like we've talked about before, the builder is pre-buying the interest rates, and they're saying, so similar to what I showed you on the Highland website, where it's the 5.49 and the 4.49, those are pre-bought interest rates. So they're buying in on those, spending the money on the front side, and then like giving you the rate on the back side. Now, the cool thing about that is sometimes those don't actually count in these dollars up here. Right there, right? So sometimes you can get this plus a little bit of closing costs, depending on the builder. I will tell you, this right here cost them a ton of money. And the more expensive the home, the more that they are spending to get this rate here. And so you're like, Zach, why are they doing this? Because A, they want to sell homes. That's what they're in the business of doing. So they're spending money to get you to spend money and come back and say, hey, look at there. Look at that. We're going to give you this so you can get a little house like this. Like so. Yeah. So you get a house and everybody's excited, right? So that's kind of how they're structuring that with the forward commitment when you get the money or you're getting the rate. And it all just depends, right? So like, here's what I'll tell you. If the more house you're spending money on, and I'm going to show you the real numbers here in a second, the more house you're buying, naturally, the more this rate fluctuation or this buy down or this closing cost money changes your monthly payment scenario, right? Like if we're doing this at $350, that number is totally different than us doing it at $750 or $650 or whatever. Here's what I will also tell you. I have a lot of buyers recently that qualify to use their VA financing, right? They have served in our military and listen, you have earned that right. And I will absolutely love that for you guys because it is one of the best loan programs out there if you qualify to use it. And when you take that and you stack it against builder incentives and new construction stuff, the VA loan is one of the most powerful things out there. So if you have served and you are qualified to get a VA loan and you're not sure where to go, I'm telling you, new construction is where I would be looking because I have clients, we're closing in a couple weeks. They are walking away from the table with a check, like getting money back because of their VA loan. It's a powerful, powerful loan. Like I said, I love to get you connected with some of my loan officers that can talk you through it and understand it. And if you qualify to use it and you have earned it because you served our country, I want you to use it and I want to help you make it happen because it's one of the best deals. And again, when we stack it with a like builder incentives, it's phenomenal. We're going to do an episode here in a couple weeks. I'm going to have one of my lenders on here. We're going to talk all about that VA loan and how to make it work for you. So that's my soapbox on that one. Now, let's get in and let's actually do some numbers based on home. Like, so I told you at the beginning, $600 a month savings. You're like, Zach, how do we get to that number? I want to get there. You're like, shut up, get me there. I got you. All right. So we're going to go back to let's see if we can go back to the computer screen and get you guys here. So I want to show you, we're on the Highland website. And so I actually just pulled the numbers on a house over here. So we went to Quail Hollow, which is one of their brand new communities in Rockwall. Got some great opportunities out there. And I pulled this house right here. So $749,990. And again, like what we're looking at, seeing it on their website, we have that 5.49 fixed and 4.49 for the life for the first year on the loan. So basically, when they give us that, what they're saying is, if I show you my screen again, so 5.49 fixed, right? There we go. There we go. Fixed 4.49 year one. So that would be like, so years 2 through 30 is right here. 2 through 30, the life of the loan for however long you have the house is fixed at a 5.49 rate, regardless of what the market does. Year one, so payments 1 to 12 are going to be at 4.49. So this is not a calendar year, this is 12 payments. So like, let's just say, for example, we close on your home in April. You're not going to make a payment in May, because they're going to collect on the interest there. You're going to start making payments in June. So from June to June, you're going to be at 4.49 on year one, and then you're going to go back to 5.49 for the life of the loan. This is a great deal, especially if you're not sure, like none of us are sure what's going to happen in the market, what's going to happen with interest rates. So this, like, locking this in is one of those things where I think it's absolutely brilliant. And if the builders are willing to do it and they're willing to spend the money, take advantage of it as much as you can. So that house we were looking at was 7.49. So let me pull up my actual calculator. and show you kind of how this plays out. So 7.49, and I am calculating this with a 20% down payment, just because, you know, that's kind of what they're showing on that particular website. Here's the thing, that doesn't mean we can't get some of those closing costs if you're like, oh, I just want to put 5% down. So let's just say we're going conventional, and let's just do it at a 5% down payment and see what that looks like, right? So 7.49 on a 5% down payment. The interest rate, we're going to start with what it is in the market. So 7.10. There we go. 30 years. Hazard insurance, we're figuring probably 18 to 1900. It's probably a little low. Let's just be safe and run that to 2000, because we have seen rates go up a little bit. And then tax rate in that neighborhood, Rockwall County has some of the lowest tax rates out there. I'm pretty sure it's 1.67. So if we compute that at 7%, so that rough estimates, these are not absolutes. I'm just ballparking numbers here. So 63.76 at a 7.10% interest rate at 750 purchase price. Now we take that 7 and let's make it a 5.49. So 5.49, 56.30, right? So we've dropped it significantly. And if we, like, realistically, so that would be what it is for the life of the loan. If we come in and we do that same number and we go down to the 4.49 that we're getting on the first year, so 56.30 drops again to 51.96. So 51.96, if we go back just for reference, and all I'm changing is the interest rate, so 51.96, 7.10, 63.76. That is a massive amount of savings. Now it's like, of course, you're buying a $750,000 house. That's some serious savings. But let's do it on something that's not 750, right? Let's just go look and say, hey, maybe my budget's not 750. What could we do, right? We could go. Let's go down here to the south side of Rockwall, and let's just find something that's not 750. So we come and look at something and say, okay, look at this. We've got one right here, 525. So let's go do our same math at 525. So we change our home price, 525, 3 zeros, interest rate at 7.10. That tax rate for that neighborhood is a little bit higher. I think it's right at 1.9. We'll call it 1.99. Still not crazy. We're going to compute that. So at a 7% interest rate, golly, guys, $4,600 a month at 7%. If we drop it to 5, this is why the builder money is so good. 5.49. So 46.59. Again, estimated 41.36. So we're saving, what is that? $500 a month, $6,000 a year over the life of the loan. And we drop it again for the first year, 4.49. Compute $3,800. I can't, I don't know how else to do that math for you and just tell you the builders are putting so much money out there right now. Yes, in some ways it's baked into the prices. Yes, it's baked into their margins, but the amount of money that they are putting out on the table to continue to move homes, we've got to take advantage of this. I don't know how long they're going to do this for, right? I think there will always be some sort of incentive money attached to builders. I don't know how long it'll be, but for now, we've got to move and we got to take advantage of it. And you got to understand your numbers and how to make them make sense. And you're like, Zach, I don't even know where to look, right? Lucky for you, I built you a brand new resource. If you go to our new website, there's a QR code. If you're watching this on like a TV screen, grab your phone, click the QR code. If you're not watching it on TV screen, you're watching it on your phone, look at the description after, not right now, after the video is over. Go to our website. You can see our big brand new map that shows you all the various areas of DFW, what's going on, and you can search directly new construction right there. Weed out all the resale homes because nobody wants to look at resale homes. Search directly new construction. It's a great tool. Again, built it for you guys. I hope it's helpful. So I don't even know where to start. Let's start there, and then let's go get the builder's money. So that was scenario one. Let's look at another website and see kind of where'd that 299 go. I know I had a 299. Where'd it go? Ah, there it is. Okay, let me put you guys back over here and show you that. So rates as low as 2.99 or 5.75 and up to $10,000 in closing costs. So now you're gonna like, Zach, is that really 2.99? I'm like, yeah. Is it 2.99 for the life of the loan? It is not. It is a temporary buy down. So you can kind of see what we got going on there. Let's just take a look and see, hey, what might we find? We already looked in Rockwall. Let's go look in another city. just to see where, it's another builder of mine that I love. Let's look in, everybody wants to go to Salina. So let's see what's in Salina that has some good deals on that we might be able to move in on. Look at this. Okay. This house is a 4-bed, 3-bath, 2,391 square feet. Did we see the price? Where'd it go? $479. So, hey, even better. Let's go back to our calculator and let's talk about this from a 2.99 rate. What does it look like and how do we get there? Let me give you this calculator. So this one is actually going to be on a 3-2-1 buy down. So 3-2-1, let me write this out. 3-2-1. So you get 3% off the interest rate the first year, 2% the second year, and 1% the third year, and then 4 through 30 back to normal. And you're like, okay, Zach, when is this good? This is good if you need to stair step your way into a payment scenario, right? You're like, hey, I know my payments are going to gradually get bigger, and I need to stair step my way into that. It's great if you understand that. Here's the deal. You have to be able to qualify at the higher rate. So you can't just take this and be like, oh, we're going to get it and it's going to be awesome. The lending is still going to have to qualify you at the highest rate, but it is going to stair step your payment up, right? So let's take this house. So it was $479, 1, 2, 3. We're going to do the same down payment at 5%. And we're going to make the interest rate, let's see, 7.10, not 71. Golly, that would be awful. And we're going to do the 3-2-1 buy down. So this is actually getting us a 4-1-5-1. So you can kind of see how that money is saved. But this is not even the accurate number, right? Because we saw 2.9, 3.9. So, right, 2.9 the first year. Let me go back, make sure. Get the right numbers right here, Zach. Don't cheat us. Get the right numbers. We're going to get, boom, click on it. Here we go. 2.99 the first year. So it's going to be, let's see if we can get that math to make to where we need it to be. So is that right? Okay, look at that. So rates as low as 2.99 on a 3-2-1 buy down. I'm looking at it on the screen, making sure I'm saying it right. Or 5.75, and we'll go run those numbers as well. So on that 479 house, so we're looking at 479 with 5% down, and then basically getting us. So this is where. So on this right hand side right here, this is where we start to see it, right? So let's hit compute. Year one estimated, again, rough numbers, rough here, guys. 3,300. Then we're gonna go up to 3,600, and then 3,800, and then we're gonna finally end up at that 4,175 number, right? So this is great if you think, hey, in 3 or 4 years on a 3-2-1 buy down that the market rate's going to be better, and then by the time you get back up there you could refinance, right? So 2.9 the first year, 3.9 years 2 or payments 2 through or 12 through 13, step it up the next 12, and then you're going to go up even more. And then the other thing to consider is your payments probably going to fluctuate a little bit more than this because of your property taxes, right? As your property taxes go up, your payment's going to change as well. So same thing, not 749, 479, 1, 2, 3 down payment, or let's just take their fixed rate, right? So 5.75, 30 years, insurance. I think the tax rate up there in Salina is a little bit higher, so let's call that 2.5 just as a rough guess. Get those numbers there. So at $4,000 a month, so look at this, you got $2,655 on your principal and interest, of course, taxes, insurance, and then the PMI, right? And so Zach, people be like, Zach, PMI is bad, right? I'm like, well, not necessarily. If it gets you into a deal, we just have to do the math on what makes sense and how we, get you there to do that. So 575 or up to $10,000 in closing costs. Doing that deal in Salina, 479. We're in a neighborhood that I know is going to grow. Salina is going to continue to expand. I can't say it enough. The builders keep giving you this money. You got to take it and you got to run with it and you got to make it make sense, right? And so then we'll finish with this thought of like, well, how do we do this? How do we spend it? How do we spend the money? That's what everybody cares about. Here's what I'll tell you. Everybody plays this game a little bit differently, and it all depends on how you envision the house, how long you're planning on staying there, and how you want to play. Me and my wife, here's the mentality that we've taken every time we have bought homes, and every time I look at evaluating a deal, and every time I look at what makes the most sense of how we spend money. Should we put 5% down? Should we put 10% down? Should we put 20% down? Here's the statement that I use. I want to control the asset. There are two T's in asset, which is parentheses, home. I want control for as little of my money as possible. What do I mean by that? If the bank will let me buy a $500,000 asset, and I can do it. So if I can say, hey, I can buy a $500,000 asset, and the bank's willing to lend me the money to get this $500,000 asset, and I can do that for $25,000. If I can take $25,000 of my own money and get into the deal, and the bank's willing to lend me the other $475,000 for me to control the asset and have a place to live, I'm doing it every freaking time, right? I want to be in the deal for as little of my money as possible. I want to control the asset for as little money as possible. And here's why I say that. And here's kind of where the math in my head, this is the way I think about it. Maybe it's because I write really fast. I don't know. And I try to explain this to as many people as I can. And ultimately, here's the thing. I got to go back to big screen really quick to tell you my ultimate thing. Ultimately, it comes down to your comfort level. Like if you tell me, hey, we want to put 20% down because we only want this much on a monthly payment, great. If, hey, we want to do 10, we want to, whatever you're comfortable with, my job is to help make you comfortable. My job is to help give you perspective. That's what I'm hoping we're giving you right now, is the perspective on how to make this make sense. Hey, it's all we can do is 3.5%. Hey, all we can do is a down payment assistance. I don't care. It doesn't matter. I want to help you either way. It's just the perspective thing, right? So I'm trying to show you that. So for example, let's just keep working this same, make myself a little tinier. Can I do that? Let's just keep working on this same one we've been playing with, this 479 house, right? So we'll do the 479 one, and then we'll go back and work on maybe work on one a little bit more expensive. So let me get a little bit, there we go, right there. That more better. Okay, so the same 479 one, and then we're sticking with a 5% down payment at a 575 rate. Nothing else is changing. What you need to see at the bottom is that estimated cash to close is 37,875. So down payment at 23,950. This gives us a rough payment of $4,000. Now, if we go change our down payment, we say, hey, we want to go from 5% down to 10% down. I want you to see how this changes. So $4,000 right now, roughly month payment, cash to close, rough math, $37,000. We up our down payment from 5 to 10. We went from a $4,000 a month payment to a $3,800 a month payment, and our cash to close went up to $61,000, right? 61, right? If we go back to 5, just to make sure, 5%. So yeah, 37 to 61. We're going 4,000, 10%. 10%. So 61, roughly, from 37. So then 61,000, let me get my math right, 61,000 minus 37,000 is a difference of $24,000 that we're bringing into this deal to make it make sense, to get a $200 difference in our monthly payment, right? So we're saving, so, okay, back to here. So on this one, $24,000 difference, delta equals, not salt, 200 monthly savings. For most people, the question then becomes, what is $200 a month worth to me? Realistically, that's maybe a night or two out to dinner. What could I do with $24,000, assuming I had it? Now, this is not like, Joel, don't get in the comments, like, I don't even have $24,000. I'm assuming if we're talking about this, you have it, and we're talking about how to use it, right? $24,000 delta for $200 monthly savings. To me, that math does not make sense. I would rather have the higher payment if I can qualify, have my cash in the bank or cash invested in something else and have access to it if I have it, then go that route, right? So then it's like, okay, let's do it again. Let's jump it again. So from 10 to 20. So 20 eliminates the PMI, which is fine. It's great. It eliminates the monthly expense. We get down to 36 or 3401. But it now takes us $108,000 because 20% down on a $479 purchase price is $95,800. That's simple math. We can calculate that all day long. To save $600 a month, so 108. So if we go from our original number of 37, right? So here we're at 108, and we go back down to a 5% down payment, 37 and 4,000, or 20. 108 and 34. So same math. 108, 1, 2, 3, minus 37, 1, 2, 3, $71,000 to save $600 a month. I don't know if that math makes sense. It might. For you, it might. Again, all I'm trying to give you is a crash course, money and incentives and builders, and hey, understanding that there is so much opportunity out there to get you into a thing that makes sense. Builders are constantly advertising, and here's the thing: these rates, sometimes they come and they go, they change based on seasonality. So I need to get you connected with the builders, and I need to get you like in a conversation with them to get the best deal possible. Secondary reminder again, all of these numbers, I'm just ballparking numbers. I cannot write your loan. I need you to get connected with a lender. I have lenders. They're in the description down below if you need them. They can get you great information, get you great, paint the picture, and they work with a ton of really great builders here in DFW, and we can get that process started. And again, soapbox it for the last time. If you qualify for a VA loan, you should be looking into using a VA loan, and you should be looking into using it stacked with a new construction deal so that you get as much money out of that as possible. So I hope this was helpful. I'm trying to give you all the information I can, walk you through this, make it make sense. And that's kind of what I'm here to be, is a resource for you and your family as you are trying to get into these things and get all of this money, right? I want you to take the builder's money. I want you to understand they have so much that they're putting out to try and move homes. I also want you to understand, we have to be realistic when we look at this and see how much they're spending to make these things happen. So can we get a price reduction, and can we get the closing costs? Potentially. Can we get the moon, the stars, and the spaceship to get there? I don't know. It just depends on the builder. I try to be really good at my job, but I also want you to be really realistic. So if we can help get you into something that makes sense here for this year or beyond, I would love to do that. As always, you know how to get a hold of me. We put it all right there. I'm looking forward to continue to have conversations with you guys and helping you get as much money as we possibly can from the builders to get you into your dream home. So we'll see you guys in our next video.